Hi everyone, Adam here. Here's my 2023 market outlook. I hope you enjoy, find it informative, and we look forward to hearing from you soon. "2022 was a very interesting year because we got to experience, the fast-paced start, which carried over from 2021. And then we started to feel a lot of the pressure points, particularly in the development sector in the second half of the year. And it did result in a lot less transactions due to the uncertainty, which some of that uncertainty has carried on into 2023. However, we did start to see the surge in the rental market in the third quarter of last year, and that has definitely continued on into this year. Noticeable trends which have already started and we would expect to continue this year. First of all, on acquisitions of development sites, we're seeing purchasers build in a lot of contingencies into their modelling around sales, around cost of debt, around equity required, around construction. So when they're adding in contingencies and all of those elements, there's a big disconnect between asking price and land value. So that's one key factor. Obviously, with rates rising, accessibility to debt and the expansion of cap rates on finished assets, particularly commercial assets, childcare centres and unit blocks, that's something which is, inevitable. And another one which is worth watching for the rest of the year is investors and developers' LCR pressures from their banks. Whether that will start to lead to more, pressured sales or forced sales throughout the second half of the year, we'll start to tell. But we're definitely starting to see a lot of private debt be recalled, which you'll see with a few campaigns which have launched or launching in the coming months. Opportunities for this year. Through any adjustment phase, there's always opportunities coming through. I think let's focus on development sites first. I think any site which is still well located, held by a developer, has multiple sites, I feel there is a good opportunity to either come in and partner up or join on a structured deal, perhaps relieve a little bit of short-term cash flow pressure with a view to activate the site at some point in 2024. And with investment assets and unit blocks, particularly unit blocks, the rental market is flying at the moment. So if there are opportunities to buy established unit blocks that don't need a lot of work, with the ability to grow the rents relatively quickly, in some places you could see a 20 to 30% rental reversion in a 12-month period, which is quite significant. The challenges that we'll need to overcome, obviously, there are quite a few facing the development sector at the moment, mostly around cost pressures more than anything else. So that'd be debt and construction. So obviously we need to just find a point where there is some stability, and we feel that's probably going to happen in the second and third quarter this year. We're starting to see the easing of supply chain and hard raw material costs. That's definitely starting to stabilise. But they're definitely the two biggest things that we need to overcome throughout this year. 2023 has been an interesting start. A lot of the themes and pressures we were dealing with at the end of 2022 when it comes to selling sites are definitely still there, with a big disconnect between vendor expectations and buyers' offer price, particularly the further you head away from the CBD and you go more to lower GR suburbs. But I expect that there'll be a point where there will be a lot of transactions this year, because there is a lot of capital and a lot of groups that are well-resourced and well-funded that are ready to transact for the right site. So I'd expect that at some point there is going to be some stability and a higher volume of transactions I would say most likely in the third or fourth quarter of this year. So there's a couple of themes here that we're seeing which is quite consistent. Obviously, location. When things are tough, there is always a flight towards quality. So well-located sites, particularly within the inner ring, typically higher revenue, higher price point suburbs are still attracting a huge amount of inquiry. And also anything with a fixed or secure income with upside. So fixed and secure, obviously commercial buildings with a long WALE, established childcare centres are still trading exceptionally well. And unit blocks are still attracting a huge level of inquiry. And with the growth and the forecast growth in the rental market for the next few years, we don't really see that slowing down. We've got a great range of opportunities across the team, from low density to medium density to high density sites, anything from as small as 3 homes up to a couple of hundred units. We've got a couple of our clients also interested in some structured transactions as well. So if you're in the market, whether it be for a site or established existing asset, we look forward to hearing from you. Reach out, give one of us a call, and I'm sure we have something that'll fit your needs.